I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and it is Friday, July 22nd.
And this is the interest rate update.
If you're new to the channel, be sure to subscribe, comment, and like. And also, remember, this is just for informational purposes. This is not financial advice.
That's right. We're not financial advisors. We're smart, but we're not that smart, folks.
All right. 30-year fix today, we see them at 4.99.
Is that a 4?
Yeah, 4.99. The 15-year fix at 4.375.
The 30-year FHA 4.5. The 30-year VA 4.5.
These interest rates have no buy-down points. There's no extra fees or points to buy them down, like to get that rate.
That's right. To get that rate, based upon these scenarios, there's no extra fees to get that rate. You can buy it down if you want to get an even lower rate.
Yep.
But that rate that we're quoting has no extra cost, no hidden fees.
That's right. So next week, the Federal Reserve, Jerome Powell, is going to be talking, I think it's July 27th, it's Wednesday. It'll be actually announcing what the Fed's increase will be.
What their next increase will be.
Yeah. And so for a lot of people, they've been hearing, right, we've all been hearing, oh, the Fed's raising rates, the Fed's raising rates. We've been hearing that for about 7 months. And the way that we handle or should be thinking about interest rates is the mortgage interest rates that we give you updates on are showing you up to the minute, up to the day expectations.
Yeah. Sentiment.
It moves, mortgage rates move quickly. They move daily, sometimes interdaily.
Right.
The Fed only talks and speaks, once a month.
Mm-hmm. Mm-hmm.
So everybody is, all the markets, the traders are always speculating on what the Federal Reserve is going to do. So people have been expecting a 0.75% rise for about a month. And then about a couple weeks ago, people started thinking, due to the inflation report, oh, maybe the Fed's going to raise it a whole 1% more.
Right. And remember, too, this is the Fed funds rate. So this is different than the actual mortgage rate, but the mortgage rates are based off of or have some correlation to what the Feds are doing. But it's not a direct lever. It's not, once the Feds raise it 1%, interest rates don't go up 1%. Mm-hmm. That's a lever that they actually pull in order to help slow or move the economy along.
And this comes from the CME, the Chicago Mercantile Exchange. The traders there, the futures traders, are expecting 81% chance of probability that the Fed will raise the rate 0.75%. And there's about a 20% chance that it will be 1%. If the increase is 1%, on that day, on that news, we will probably see mortgage rates immediately rise if there is a 1% rise. But if it's a 0.75%,
right? Because right now they are thinking as long as it hits about what everyone thinks, then rates will be unchanged. Because rates, we were talking before the podcast, rates are kind of it's seeing into the future. Mm-hmm. Interest rates are the future. This is the present. So as long as things act according to what people think it's going to be, which is an 81% chance that the Feds will raise 0.75%, then everything should be unchanged. But if all of a sudden they raise it to 1 or 1.25, holy cow! Yeah.
Okay, so quick review of a loan estimate. By federal law, you have to receive a loan estimate from your bank if you're going to get a purchase or home refinance loan, and you are going to be looking at 3 pages, right? Mm-hmm. It's the loan estimate. And
most exciting pages you'll ever read in your whole life.
But what we want to show is the interest rates. Now, this is actually yesterday's estimate.
Mm-hmm. But for example purposes, it's what is the rate and are there points? So it's okay that it's
page 1 shows you the interest rate, shows you it's a 30-year fix, it's a purchase, the loan amount, and the sales price. But more importantly, page 2, top of that, what are the fees? There's no buy down. There's no discount points. Total And then you just have the standard fees, which is just the underwriting fee.
Yeah.
Here.
Yep.
Standard fees.
And everyone's got those standard fees. When we actually have a borrower, or borrowers that actually call us, and they're always a little bit confused. The one most recent was we quoted the 5.125 because this was yesterday, and wanted to buy it down. Buy it down to like 4.6. So hey, what is the cost for the 4.6? We go in there. Oh, it's going to be $2,891. Oh, great, let's do that. So we do it. We get the loan in process, and all of a sudden he gets his paperwork, and he's like, "Whoa, how come there's all these extra fees?" Like, "Oh, well, sorry, that's what you meant when you said you like to buy down the rate." So even people that ask for buy downs, it still can be a little bit confusing. So if you have those questions, feel free to call.
We'll be happy to review your loan estimate if you have one. We're here to answer all those questions.
Yeah.
And we will be back Monday, everyone. Be sure to subscribe, comment, and like.
All right.
Take care.
Thanks, folks.
Thank you, everyone, for watching our show today. If you have questions, be sure to email us at rates@azmortgagebrothers.com. And be sure to take a look at all of our other videos on our channel.